Um, Good morning, good afternoon, good evening, wherever you might be. Thank you all very much for being here. This is a brown bag lunch that we're preparing in the context of the Prospects program. Every year we have the pleasure of having the program managers of the 8 Prospects countries with us for a planning, for a programming meeting with the different technical departments of the ILO. It's a very important moment for us in this program, and I've just realized that I haven't even introduced myself. Allow me to introduce myself. Nick Greiswood. I'm the program manager for the global ILO Prospects program. And this is always a good opportunity when we have our colleagues from the field with us to spend a little bit of time explaining in a little bit more detail in terms of what they're doing on the ground in different aspects of the Prospects program. Prospects, for those of you who may remember, but as a reminder and a bit of knowledge for those who don't, is a relatively unique partnership program that is looking at how we can support countries that are being impacted by forced displacement. It's funded by the government of the Netherlands. We have the pleasure of working with our sister agencies, UNHCR and UNICEF, as well as the finance institutions, the World Bank and the International Finance Corporation in this program. We're working in several countries in East Africa, in the Arab states, and in North Africa. We have Egypt, we have Ethiopia, we have Kenya, Sudan, and Uganda, and we have Lebanon and Iraq and Jordan from the Arab states as well. A challenging program in today's forced displacement space. One where we are looking at how we can support UNHCR and the rest of the global community around the implementation of the Global Compact on Refugees, particularly around socioeconomic inclusion in these countries, for host communities and for refugees, and of course for internally displaced people as well. That brings in itself enormous challenges. As I was mentioning, we look at different areas of where job creation, enterprise creation might be, the issues of social protection, the issues of skills development, both for refugees and for host communities. And then, of course, how all of these different technical areas fit together, work together in the wider context of development strategies of the governments that we work with, as we look at trying to support greater access to income generation and decent work in the parts of the countries where we are operating. We thought that today it would be helpful to focus on one particular area of work that we're doing in these countries. We have 3 excellent speakers with us today. We're looking at the issue of financial inclusion, which is both an opportunity and a challenge in the countries where we work. An opportunity insofar as it'll help us in the context of developing healthy, strong enterprises in these different geographic locations, but also challenges in terms of to what extent can forcibly displaced populations access financial inclusion, which of course remains a big challenge in many areas of our work as well. We have 2 country program managers with us. We have Shaza Al-Jondi, who is a regional CTA from the Arab states. Shaza covers Lebanon in particular as a country, but has also for several years now been offering support to the other countries of Iraq and Jordan, and brings enormous experience from that particular region and the impact of the Syrian crisis in that space. And we also have Stephen Opio, who covers Ethiopia and Sudan. This will be moderated by our dear friend from the social finance branch in the enterprises department, Yusra Hamid. Many of you will know her, no doubt. But Yusra has been a mainstay in terms of our focus on the work on financial inclusion, with some very innovative work in Iraq in particular, as you will hear later. But we are deeply grateful to all of the technical specialists across the different technical departments of the ILO who support the program. It's an integrated program. I would go so far as to say possibly one of the best examples of how we as an institution, when we bring to bear all of the different technical areas of the ILO with the incredible expertise and experience we have, both in HQ and the field, where we can really make a difference. So without further ado, Yusra, I would like to hand over to you for this particular presentation. And colleagues online, you're very welcome, and we hope that you will engage with questions. And we look forward to the exchange. So Yusra, over to you.
Thank you very much, Nick, for this introduction. And I'm really happy to be moderating this session and sharing with you and helping the two colleagues to share with you the amazing work that has been done in the region. So for the two, perhaps three ones that don't know me, I am Yusra Hamid. I work in the social finance here based in HQ. So the social finance program is the focal point at the ILO on all that is linked to the financial system. So we work across three pillars: one pillar on sustainable investing, another pillar on insurance, and the last pillar is on financial inclusion. And where is the work with prospects and with the different partner financial institutions that want to work with the refugees and that want to reach out to refugees is located. So we have started the journey before prospects, but actually the journey of facilitating access to finance for refugees has been brought to another level with prospects and with the commitment of the colleagues in the ground with the different CTAs. The two more successful, or one of the most successful experiences are here, but also in case the other colleagues can join us, they can also share some of their experiences. So within the social finance and with prospect and with the help of the colleagues in the ground, we have developed and put together an intervention model that I would like to share with you, and I'll run you through it very quickly before leaving the floor to the colleagues to share with you the more exciting examples from the field. So we work at three levels. The first one is at the policy level, meaning with the regulators, with the central banks, ministries of finance, that are the usual constituents of the financial sector. So it is mostly around policy advocacy for FDP so that they are integrated into national financial systems, but it can also be how this integration can be through adapting the KYC, the know your customers. That is one of the issues where refugees come to a bank or to financial institution for a loan or for a bank account. They are asked to provide documentations that they don't have. So this is one of the first issues that they stumble into when they want to access the financial system. The other level as well is the fact that on the supply side, so banks, microfinance institutions, financial cooperatives, they don't know this population, or they have pre-thought ideas about them that, oh, no, this population, very risky, extremely vulnerable, not credit-worthy. They are going to take a loan today, and tomorrow, after tomorrow, they will be leaving, so we won't get our loans back. So it is this a lot of misconception leading the supply side, so the banking sector and the financial sector, not to provide financial services to to the refugees. So what we do there is that we have devised a program that we call Making Finance Work for Refugees and Host Communities. That is a training program for financial service providers that takes them really by the hand, one, to demystify this segment, to understand this segment, to segment that refugees are not a one group, but it is, if well segmented, then you can target well the refugees that are most that would benefit actually from the loan or from the financial service. And once we help them, I mean, once through this training, the ones that are really interested and that they realize that this is something that they would, that is of interest to them, that aligns with their strategic goal as an institution, we accompany them through technical assistance with the idea to make them really realize and have a diagnostic of the institution that we call an institutional assessment. We follow it by market assessment, where we help them to do, we don't do for them, we help them to do, and we transfer the knowledge for them to really go to the market exactly in the camp, exactly in the settlement, and discover, explore the market that they will be serving. So they'll be the ones really doing the market research. And from there, we would help them to think through all this, all the data that they have on, okay, what products are needed and what products we can provide to the sector. So just examples that we have seen, there were savings products that came out. There were loan products that were linked to VSLA, so the Village Saving and Loans Associations. Thank you very much. So these informal groups of people that gather together and put money for every cycle, and then they do a payout periodically. There were also a lot of institutions that were thinking about digital provision of loans and so on and so forth. So once we help them think through the product, then they go through a piloting phase where they test it on a small group of people that can go from 100 to 200, 300, depending on the institutions. We learn from that experience, and then we tweak the product, and then they can roll it out. So this is the work that we are doing on the supply side, and I'm sure that both Stephen and Shaza will share with you examples from the countries, the two countries. And on the other side, one of the bottlenecks as well is that refugees, but also host communities, have very low understanding of the financial sector, leading them not to go, and leading them to think that this is not for us. Banks are not for us, loans are not for us, savings are not for us. So then they just don't go. And we have a specific program on financial education for refugees and host communities that has been also provided as a prerequisite to the referral to the banks. And it was also linked in terms of complementarity, because our objective and what we aim at is to provide them with financial services so that they can create, grow, expand their businesses. So the idea also is to enable them and provide them with entrepreneurship training, depending on their needs, so that with the conjunction of knowing better the financial sector, knowing their financial needs, managing better their money, and also knowing how to manage their enterprise, with these two, they can then refer up to now very successfully to the banks with a high rate of acceptance by the banks. Voilà, so this whole model working at these three levels, of course, at the regulatory environment, but also supply and demand, with the idea that all of this will provide sustainable access, so that we are showing and we are helping the financial institution to understand the market and then to go after once the ILO is out, so to continue sustainably, because they will see that it is a market for them, that there is a business case for them to do it. And also to provide opportunities for the displaced and host communities, both households and businesses, also to access finance, to expand, and to meet their financial needs. So this is the model. The applications, of course, are dependent on the countries, on the situations, on the openness of the central bank, yes or no, on the environment, on the many aspects, and I'm sure the colleagues will share also with you examples. And I think if we can start the way, let me tell you how we are going to do this. So we are going to show you videos of both Ethiopia and Lebanon, of how examples of how this has been implemented. And then I'll have few questions for the colleagues, but please feel free to jump in at any time. It is not a formal meeting, it is an informal exchange. So if you have any question, either here or online, please jump in, raise your hands online if you want to speak, or type in so that I can read your questions at any point in time. And with that, if we can show the video starting with Ethiopia. So it is, while Nilesh is putting it up, it is with Shabele Bank, one of our partner financial institutions in Ethiopia that is working in Jijiga, in the Somali region, and that was one of the first who started with in East Africa with the loan product. I think you need to use your headsets.
By hiring a local as well as
Wait. No, I'll run it without the captions. It will work. I'm running it through.
ILO helped us a lot in the development of this product by hiring a local as well as international consultants that will work with us closely and continuously till the final date of the pilot implementations. The consultants really helped us a lot to understand by making institutional assessments and market assessment to identify the gaps between the needs of the refugee and host community and the financial and services and products offered by Shabele Bank. The consultants and the bank again come together to design and develop a new product that mainly targets the refugees and the host community in the region. The product we named lately by the name of Aisha, with the intention of giving more focus on female-owned small business enterprises. What makes this product very special and unique is that the key challenge for everyone who wants to get access to loans and for refugees as well is the collateral. So in order to overcome this challenge, we developed this group collateral mechanism. So the customers themselves will form a joint liability group, and they will have agreement between them that every one of them will be liable and responsible for the others. In addition to that, we utilize 100% Sharia compliant financing approach, in which we provide murabaha financing mechanisms by procuring or purchasing the items that our customers need for their business and then reselling back to them, giving time to repay back in installments on a monthly basis. It's now in the pilot phase, and hopefully with the conclusion of this pilot, after we make the necessary evaluation and monitorings, we have a plan to roll over other branches and scale up this product to all of our Shabelle Bank branches where refugees are hosted. This phase, we have a target to provide loans to 200 people, 100 from the refugee and 100 from the host community. We can say we are now at midway of this pilot implementation. We provided loans to 44 loan customers. We have also saving accounts of more than 200 people already opened accounts as beneficiaries of these financial products.
So, Stephen, amazing work has been done in Ethiopia with Shabelle Bank. So I wanted to ask you first, what were you most proud of on the intervention, on the work of Prospects Ethiopia in the financial inclusion space?
Okay, thank you, Yusra. I think, you mentioned earlier that most of these financial institutions do not fully understand their audiences, especially those who are in displacement. And I think from our side in Ethiopia, just having that shift of the bank beginning now to appreciate this audience that they did not serve before, that they did not have specific products designed for before. I think that was one of the most proudest moments, because many times we can develop technical support tools for financial institutions and other partners. But if the uptake is not there, then it becomes a challenge. And I think the most important thing in this process for Prospects and for the ILO is the fact that, through the ILO's technical support, the bank was able to adjust its internal lending procedures. It's not a common thing to have financial institutions adjust their lending procedures to suit segments such as displaced persons in the case of Ethiopia. So for us, that was a very positive and impressive change that we saw coming from ILO's technical support, having the bank work with us on understanding the segment and what financial products can be developed for this segment. But also, most importantly, and the unique thing in this case is the mix with the Sharia law, because the Somali community in Jigjiga, where these persons are displaced, is very heavily driven by that Sharia law. So having a mix of the Sharia law with the ILO technical guidance that makes them adjust their internal lending procedures, say we shall pilot this jointly with you. Let's have a trial period. Let's test out on a few before we roll out. And this is not just any ordinary bank. This is a financial institution with 50 branches across Ethiopia. So we can imagine changing the lending procedures and changing the internal manuals and policies of the bank that has 50 branches across the country. What would the ripple effect be for a country that hosts nearly 1.1 million refugees? So I think for us as ILO, this proof of concept and having the financial institution adapt its internal procedures was one of the most proud moments that we can say, yes, this intervention was a success. And I think uniquely, also the approach used on lending, which is not giving cash, but is actually buying, stock and assets for the borrowers. So it removes all the risks associated with, someone having cash. So you want to start a business, it's a restaurant, it's a barber shop, it's a salon. We are not going to give you the money. We are going to actually give you the stock that is required to start that business. That was also a unique thing that we saw in this partnership with Shabelle Bank. But most of all, the fact that it has 50 branches and it could change its internal systems based on the ILO technical support. And now we have a pilot phase that has 200 borrowers with an average loan portfolio of about $250 equivalent. This is not a small investment, and this is not a small initiative. And we hope that after the pilot is concluded, with repayment periods of between 6 months to 12 months, we'll see it scale beyond just one branch to all the branches that host refugees within Ethiopia. And refugees, just to say, are not our main focus areas, the ILO. But the fact that the program is targeting displaced persons and host communities, it means that if this approach works, then we see the bank also spreading it up to the rest of the Ethiopians, because refugees and displaced persons are not different from the ordinary host population. So that's a very big milestone for us, and it's a proud moment.
Thank you, Stephen. Yes, so yeah, no, definitely. And this is also something that I've heard from many countries where the fact, the technical assistance of the ILO in the different countries, for them to understand a segment, a refugee is a segment, to have tools for market assessments, for tools to analyze and to devise a product, it is definitely a learning that has been transferred across the other segments as well. So definitely, I think it's a great achievement indeed. So let's shift continents and let's move to the Arab states and look at the video from Lebanon. Also another environment, another, I think it's, we can call it a country with a compound crisis. It's not only the refugee crisis, but it is many crises. Yes.
بالنسبة للمبادرة اللي نظمتها منظمة العمل الدولية والمجموعة، هذا كان شيء كتير منيح للمزارع عنا بعكار وبلبنان عامة، وأعطاني القرض وقدرت اشتريت فيه أسمدة وبذورات وأشياء للزراعة، ودفعت حقها نقدي ووفرت بحقها كتير، واستفدت وقدمت لقدام كتير منيح من خلال هذا القرض.
أهمية هذا التعاون ما بين منظمة العمل الدولية ومؤسسة المجموعة للتمويل تتعلق بالتوقيت، لكن أيضاً بالظروف الاقتصادية والمالية الخانقة التي يمر بها لبنان منذ عام 2020، واللي أدت إلى توقف كافة أنواع التمويلات لأصحاب المشاريع الصغيرة والمتوسطة، سيما المزارعين.
استخدمنا برنامجين: حسن مشروعك الزراعي إياب لتحقيق هدفنا بتعزيز الوصول للمزارعين والعمال الزراعيين إلى التمويل والائتمان. شمل المشروع تدريب أكثر من 1550 مستفيداً، من بينهم حوالي 50% من المزارعين والباقي من العمال الزراعيين والشباب أصحاب المشاريع الناشئة، وكذلك حوالي 50% من النساء.
أنا بشتغل أنا وأولادي، كنت أنا جوزي مريض ما بيشتغل، ما في يشتغل، صحته ما بتسمح له يشتغل بالأرض، وأنا اشتغلت بالأرض وعلمت أولادي وهيك من شغل الزراعة. بهاي فترة المرأة كتير إنه نتعب وتعبنا وصعوبات مرقت علينا مشان الزراعة وهيك، الرزق بكلف كتير، وإنتاج ما إنه بنبيعه رخيص، ما بنبيعه غالي كتير صعبة علينا وعلى العالم كله. جتنا جماعة من الجنوب يا حرام رفيقوا لأبنا، ضلوا عندي شي شهر.
أول شيء بالصعوبات بالاستيراد، عندنا كل شيء مستورده من برا. هذيك السنة يعني صار شتاء كثير، صار عندنا فيضانات كثير، الأرض صار غرقت بالمي، يعني ما عاد تعطي إنتاج منيح. في عندنا قصة بالنسبة للمناخ، صار في عندنا نحن هون بلبنان كمناخ، كان عندنا مناخ معتدل. هلا هيدول ال4-5 سنين اللي اجوا تغير المناخ اثر علينا كثير، عم يتاخر الشتاء علينا كثير. هيدي السنه بسبب الوضع الحرب وما في استقرار امني ولا شيء، تأذينا بالاسواق شوي بالاسعار.
أطلقنا وسط الأزمة المالية الخانقة التي يمر بها لبنان قروضاً مدعومة للمزارعين بقيمة 1.3 مليون دولار، أو ما يعادل تقريباً 400 قرض. نتيجة لهذه القروض تم خلق فرص عمل والحفاظ على أكثر من 1300 وظيفة.
يكتسب هذا المشروع أهمية اقتصادية بالغة بلبنان وبالظروف الحالية، ليس فقط من خلال مساهمته بدعم القطاع الزراعي وخلق فرص العمل، إنما أيضاً من خلال المساهمة بإنعاش قطاع حيوي مثل قطاع التمويل الأصغر.
سمعت عن هذا البرنامج إنه عم يعطوا أرض وهكا، قلت لها بدي هيك مشان بدي أجيب أغراض، بدي أجيب طاقة، بدي أجيب شغلة، بدي أجيب بيت نايل وإسازيل على البيوت.
Thanks. So same question to you, Shada. So what were you most proud of?
Thank you, Yusra, and good afternoon, everyone. Yeah, a lot of things actually we're proud of. And just to say, by the way, a note on the video, we have a minute left, but we just wanted to cut it shorter for the sake of time. So you're all invited to watch the whole video. Well, before just saying three things I'm mostly proud of, in particular in relation to the financial inclusion intervention in Lebanon, I just want to highlight a few points from what my colleague Fadia and also our partner from the microfinance institution have mentioned. We need to take this into perspective and into the context of Lebanon. Lebanon has indeed been going through a multifaceted crisis since 2020, and described by the World Bank as one of the 10 worst in the world in the modern history. So the country has gone through a complete financial meltdown, economic crisis, of course, affected by COVID as well, the Beirut blast that hit the country's capital. And all of this, and of course, a continued political vacuum, we are seeing a glimmer of hope now, let alone all the impact of what's happening and has happened in the region, starting, of course, with the impact of the Syrian refugee crisis. Lebanon remains to have the highest refugee per capita population in the world. But also everything happening in Gaza. So Lebanon has been affected by the spillover effects of the war in Gaza since 2023. So I'm not even going to talk about the war in Lebanon and the escalation of attacks since September 2024. So this is a very important background to understand and acknowledge what the country has been going through, and to also understand the increase in poverty and increase in vulnerabilities amongst everyone, and to also realize how difficult is the context for the ILO and other UN agencies to work in and try to engage with the tripartite constituents, with our partners, on trying to bring in the refugees in the picture. So there is, of course, the negative sentiments against the refugees, but they also got the anti-refugee rhetoric got worse with time because of real economic challenges that the country has been facing. So this is really just the scene setting. Now, in light of this context, and I think maybe a few points that were already mentioned by Fadia, but I'll just frame them more from how we are proud. One is that through this intervention, we managed to support the agriculture sector that really was amongst the most really hit hard by the multiple crises. As we know, it's a sector that has huge potential for contributing to the economic growth, to creating jobs, and also it's a sector where Syrians are legally allowed to work. However, the sector has not been invested in enough, and it's a sector that, of course, struggles from major decent work deficits. So the fact that we were able to focus on this sector and really bring a continuum to what we have been doing in Prospects and in other ILO projects to enhance productivity in the sector. So the access to finance really came to complement previous work that the ILO has been doing in terms of trying to move towards formalization, promoting dialogue on extending social insurance and social security for workers in the sector, but also trying to find ways to enhance access to employment opportunities. The second point is that, and really we are very, very proud of it, in this particular context in Lebanon, the difficult one, is the fact that in this program, we were really bold enough. We believed that the microfinance sector can contribute to the country's economic recovery. We took the risk, and of course, we were very lucky that we had a very understanding donor that accepted with us to take the risk at a time when the whole sector was collapsing, when everyone, all the international community, was actually moving towards grants, no one was giving loans in the country. So, and again, I mean, in addition to what I've explained on the financial and economic crisis, I mean, the country also went through major devaluation of the currency. So you can understand also how lending in such a context becomes almost impossible. Despite all these challenges, we decided that there is indeed a demand for the microfinance sector, that we need to take the country again into a more sustainable path, because Lebanon, I mean, had major work in the microfinance sector before. There are huge examples from the past. So we believe that the farmers and like other SMEs really cannot continue relying simply on grants. So we designed a loan product, and that's really also my next point on why we're proud, because we really adopted an adaptive management approach. We try to assess the evolving needs of the farmers, and these needs were really evolving by the day with the devaluation of the currency. We assumed at some point, based on studies we've conducted, that shifting to modern greenhouses was really what farmers needed. We realized that in the sector, they really needed more basic inputs like fertilizers and seeds. So we also had, and renewable energy at a time when also the country was struggling, you know, from the fuel crisis. And that's why we did not come in with our own ideas. We really invested in an in-depth market assessment. We took the time to understand what the market needs when it comes to financial inclusion. We picked a microfinance institution that is very well established in the field, that was ready with us to take the risk. So despite all the challenges that they themselves had with their loan capital and the portfolio and all the losses that they have incurred, they actually put in money from their own resources. And that was the conditionality we actually put when we called for proposals, that any microfinance institution willing to work with us on this intervention will have to also contribute financially. It's not going to be all funded by the ILO. And believe it or not, I mean, the model proved to work. Despite a lot of warnings from everyone around us, the repayment rate is more than 95%. There is huge satisfaction from the farmers, even now at the time during the war, during the escalating conflict in Lebanon. Some of these farmers came to us and they wanted to take more loans, and they said they were ready to actually repay them. So we established this trust in the system, in the microfinance sector again. And we created more demand for new loan products that are also becoming more important in the light of these crises. One example is using renewable energy in the agriculture sector. So this is, I mean, all of this together really makes us proud. And I think we're going to touch upon more challenges and the refugees. So I'll touch upon this later. Thank you.
Thank you, Shazza. So both of you hinted towards that access to finance and the work that you have been doing with the financial sector, with the financial institutions, was linked to other activities or other objectives of Prospects and of the ILO. You mentioned formalization, you mentioned, of course, job creation, employment. So if you can tell us, perhaps we start with Stephen, if you can tell us what are the linkages, or how did you see financial inclusion contribute, perhaps enhances, or vice versa, other aspects of the objectives of Prospects and of the ILO's objectives?
Okay, thank you, Yusra. And anyway, Prospects is working, like Nick mentions, in 4 key areas of education, employment, which encompasses enterprise, protection, and critical infrastructure. And financial inclusion cuts across all these 4 areas, whether it is the need for accessing vocational skills or access to employment, for self-employment and enterprise startup, protection, and also infrastructure. So one of the things that we saw, especially within the financial inclusion interventions in the Kaberbea region of the Somali region, our investments in the agricultural value chain of dairy. We're working within the dairy value chain and strengthening the market systems, market linkages, and the formation of cooperatives. Many times, these cooperatives have a huge need for access to finance to expand. And through this intervention with Shabele, we saw more and more of these cooperatives being linked to the financial institution, which was not the case before. Because even if this is a pilot testing the Aisha product, it doesn't limit others from beginning to have access to the financial institution and either get similar products or other products that are being offered. This is also linked to the employment-intensive public works within the same dairy value chain, where our interventions in providing access to water for production for increasing dairy production of the animals. Some cooperatives were formed along the way. The refugees and the host communities that provided labor and their time through labor-intensive works approaches also began to form themselves into cooperatives that are being linked to the financial institution. So this is linked also to the financial education bit because it goes hand in hand. The more awareness you create on financial literacy and the need for you to save and use part of those savings to start enterprises, you need to formalize by banking and saving a certain percentage of your earnings in order to qualify. So this drove to more and more of the beneficiaries along the value chain of the dairy intervention being approached or being linked to the financial institutions. One of the things that we also saw coming out very strongly was the interest of the central bank, the National Bank of Ethiopia, because it's the regulator. It's the one that eventually gives the final clearance on how these institutions should work, but also the interest from the microfinance associations in Ethiopia. Because like my colleague, Shaza says, most of these populations are in vulnerable situations, but are also investing in agriculture, which is prone to all sorts of shocks, climate change and all that. So Ethiopia passed a proclamation in 20 or thereabout that allows for these financial institutions and microfinance institutions to accept movable assets as part of the collateral. Because looking at those who are in agriculture, then the agricultural commodities and products also become part of the movable assets. And another twist to that was then how do we develop microinsurance products? Because with the climate shocks that exist, especially in areas such as the Somali region, you can't avoid risks. So how do we mitigate these risks? By coming up with insurance products that the population then can rely on in case of risks that befall them. So this has been linked a lot to, the cooperatives work we are doing, the formalization. I mean, Shaza spoke about it already, but also the policy perspectives and the linkages of these to microinsurance and the need that these populations should be protected in case of climate change disasters that are sometimes unavoidable. So these are some of the linkages that we saw happening. And increasingly, like I mentioned, the bank then is thinking of expanding this beyond just one region. And the trickle-down effect across, the 4 areas we work that facilitate access to finance for self-employment becomes very critical. But one key thing is that even with access to finance, there is still the need for business development support services, because access to finance is one, the commodities are provided and all that, but without business development services on how to manage your enterprise, it becomes a bit tricky. So this has also been linked to our work on BDS. Most of these persons who are borrowing from the Shabele facility are attached to business mentors supported by ILO in terms of building their capacity through the Business Development Service Providers Network. And then, the 360 degree of, business development begins to take place, including the access to finance, business development services, and then linkages to the market. Maybe the final one that we see that maybe would scale this is the market linkages, because if you look specifically at the dairy value chain, where we see a very high potential, the linkage to the market with the main aggregator, who is now looking to procure rather at large scale, becomes essential, because for them to procure at large scale, then the cooperatives and the rest of the actors below need access to finance in order to scale. And this has proved to be one of the main game changers. And going forward in the second phase of the program, it's where we would want to put most of our investment to see how do we strengthen that market linkage while taking opportunity of this access to finance that does exist at the lower end of the chain.
Thank you very much, Stephen. I think because you mentioned cooperative, you triggered questions here from Simel and from the colleagues in COP. But because there are questions here, while Shaza is going to answer, please think of your own questions, because I'm going to open up for questions to you, and I'll take Simel's question first. So first, the same question to you. What have been the linkages, and have you seen any strengthening between vice versa, access to finance, and the other aspects and the other objectives of the project and of the ILO?
Well, I mean, to start with, we have to build on the premise that access to finance or financial inclusion is a means, it's not an end by itself. So it is really a means to support a segment of the community to move towards, enhancing their income, their productivity, but also their ability to create decent job opportunities. I think this is the beauty of Prospects, as Stephen mentioned, that we are always constantly challenged to think of the community we are working with and what their needs are, rather than us and our tools, right? And what we have in terms of what we offer. So we constantly need to think in integrated approaches, because these are the realities on the ground, and this is what these realities dictate. So indeed, I mean, as a starter, as I mentioned at the beginning, we worked on a sector, right? So we adopted in Lebanon a sectoral approach. And one of the reasons we did so is because it would have been very difficult to address with our constituents the challenges with regards to access of refugees to the labor market. We needed to try to take it from a sectoral angle, that this sector faces challenges, whether in terms of the quantity of jobs created compared to the potential of the sector to create jobs, whether in terms of the quality of jobs created. And then, I mean, considering that it's the agriculture sector, and it is a sector that the government had agreed for it to be one that is open to refugees, it was easier to engage. So it was a no-no in Lebanon to just start and talk about, the access of refugees. So because we took it from a sectoral approach, we were indeed, and we still continue to, make a lot of linkages across different thematic areas. The whole work on access to finance was actually triggered from the market systems approach. So we did, we took the aims, the approach for inclusive market systems. We did a whole study. We engaged with farmers for like around 2 years to understand their needs in the horticulture sector. We proved that moving from traditional to modern greenhouses would increase their productivity and their incomes and their ability to create jobs. So based on that, we identified 2 key challenges that would hinder the farmers' shift to the modern agricultural practices and greenhouses. One was the access to information, and the second was access to finance. So through this model that we put in place, we actually tried to address the second angle, or the second challenge, which is access to finance. However, because the context at the same time was changing very much, we realized that even if we enhance access to finance, the needs of the farmers were evolving so much that some of them were saying, even if you give me a loan, I'm not willing to make the investment in a greenhouse that would cost me 3 times as much as the traditional. Some of them were, but many others were not. So that's why we expanded in the design of the loan product, we expanded the offering. Yeah, we did not just limit it to the horticulture. So again, that is also a way where we adapted. Now, one other area of work where we also make the linkages very strongly is the occupational safety and health in agriculture. So we've identified, as I said, that working conditions in the sector were really below standards. One of the challenges we have with the Ministry of Labor is that, you know, they have a very weak labor inspectorate capacity. So we also realize that, you know, having just improvements with OSH in a certain number of farms will not solve the problem, but we at least thought that this would be one step in the right direction. We engaged with the Ministry of Labor, with the Ministry of Agriculture, and with the social partners in developing OSH manuals, OSH in agriculture specifically. So when we go to these farmers, which we are giving them loans, we realize sometimes that also other needs are, you know, OSH practices, that there is a need for enhancing OSH practices. And this is where we are now trying to make the linkages also between our implementing partners, that why don't we give a package of services in relation to, you know, a loan, but also skills training, because we've also developed curricula on skills training, 5 or 6 occupations. And in addition to that, the occupational safety and health. So these linkages naturally come up. It is really how we seize them. And the final point I've mentioned is our effort under the protection pillar, the social protection pillar, which is the hardest in this case, which is how to extend social security coverage for workers in the agriculture sector.
Thank you, Shaza. So while I will be looking around for hands, let me share with you the 2 questions that we had on the chat. So the first one is about, I think it's about sustainability, and how are the funds that the financial institution with whom you are working are their own funds, or are they ILO's funds? And what is the sustainability plan afterwards? The first question. And the second is about engaging specific cooperative banks. Have you been able to pick the interest of cooperative banks? And Simel was mentioning specifically Uganda and Kenya on Coop Bank of Kenya. So who wants to go first?
Okay, so I think on Kenya, I will pass the ball to the floor. Caroline, Caroline is here, so I think she will speak about the case of Kenya. And I think it's important, we spoke about this yesterday also, the fact that most governments in the region are increasingly beginning to revamp the cooperative formation and their focus on cooperative support, because it's one of the ways that you can actually strengthen the social solidarity economies. And it goes without saying that it also provides the biggest opportunity for persons in displacement to join, you know, opportunities for economic inclusion. Now, in the case of Uganda, we, because I worked in Uganda a couple of years before moving to Ethiopia, we explored opportunities of working with the cooperative associations, not the cooperative banks, because, you know, it has to be also demand driven. You know, we cannot be supply driven. I think Shaza touched on that a bit. And for as long as there is appetite, then we focus on where the gaps within that institution are and strengthen those gaps. The challenge with being supply driven, if we had continued with the cooperative banks, would be that sustainability then becomes a bit of a challenge, because then they are reliant on the support that you promised, because you moved to them instead of them coming to ask for it. In Ethiopia, it's the opposite, because it was more demand driven. We identified a couple of financial institutions, and Shabele was the one that came out the most promising. And we are seeing more interest in other institutions now as a result of this pilot with Shabele. In the case of Uganda, even if we did not work with cooperative banks, we identified 4 financial institutions, and one of them started off almost as a cooperative, and Caroline can speak more to that. I think Equity, the concept of equity originally was more cooperative. And the thinking here was how to extend access to finance to the last mile, because sometimes it is not about the product. Sometimes it's about the ability for the displaced person or the host community at the last end of the mile to actually access these services. So what we invested in was more on extension. How can we work with these institutions to actually move to the last mile? And even in some cases, like Rufi, who won the award recently, I think it was November, and, you know, provide mobile and outreach services, as opposed to having, you know, stationed outlets and branches. So I think, yes, we have attempted to work with the cooperative banks, and they are not as spread like the other financial institutions are, but also it's a demand-led approach as opposed to being supply-driven. And then this trickles now the further interest.
Perhaps to continue on Rufi, and also to share with the colleagues also in the idea of the return, and we were talking about this between Lebanon and Syria and the return of refugees. Rufi is an extremely interesting MFI that has been created in South Sudan, and when the crisis hit, they decided to move with their clients to Uganda. So they have still their premises and a branch in South Sudan. And as a South Sudanese displaced in Uganda, you can even pledge or guarantee your loan with your assets that are back in South Sudan. You can also, when you are in between the two countries, you can have your credit history with the institution through the two countries. So I think it's one of our partners in Uganda, and they have won the European Microfinance Award, because this year's theme was access to finance for refugees, and they were the winners. We are very happy, very proud.
But just to say, this is also policy. I mean, this is also possible because of the conducive policy environment. It cannot happen in every context. So you need to be mindful of the conducive policy environment in Uganda, and that allows for them to operate, you know, between South Sudan and Uganda, and supply both clients. Yeah.
Shaza, you want to take a stab at answering, or you are?
I mean, no, just very quickly, actually, it's that Simel asked a question about cooperatives, because also I forgot to mention that definitely we're working as well on supporting cooperatives in the agriculture sector in Lebanon. So there definitely is some linkages, and in our phase 2 plans, we wanted to explore also how to enhance access to finance for cooperatives, but again, across a value chain rather than just supporting individual cooperatives. But on the sustainability, Simel, I just want to, I mean, the word sustainability in Lebanon is a big word nowadays. You know, the fact that we actually really challenged the norm and try to move from the aid economy and the distorted market to actually, invest in an institution that was willing to take this risk with us and also put money from its own loan capital is one step towards sustainability. And I think this step was also very encouraging for them. We see that this experience is now, we're very proud that we're going to be presenting it to the entire UN Livelihoods Working Group along with Al Majmoua to show that this model can work even in a conflict and crisis environment. So that's it at this point for sustainability, I guess, from Lebanon.
There was a question about whose money.
Yes.
Yeah. It's important that, for proof of concept, that some money is normally invested into the process, because these are, at the end of the day, financial institutions are for profit. So the proof of concept requires then that we put in some seed money, because otherwise then, what would motivate them to do it if you do not walk the talk with them? So we have invested some minimal funds, but the sustainability of this is that then with this current proof of concept, they are willing to take it up beyond the ILO seed funding that largely went into the technical support. Most of the funding we provided was really unholding the financial institutions from the technical side, as opposed to providing them the money to say, okay, here's the money, you can now lend forward. ILO sometimes is not structured to do this in the best way, so it's also a good thing maybe. So most of the funds is then the technical support that we invest into the process, and then the bank puts in the rest of the finances.
And it has been the model in the different countries as well, so that we are really there on the technical side, perhaps helping in offsetting some of the operational costs, but really the funds and the liquidity and the loans are coming from the assets of the bank. Caroline, do you want to say something about Kenya?
Yeah, briefly. Thank you, Yusra, and thank you, Simo, for that question. In Kenya, we haven't engaged with the cooperative bank. And the reason is that the cooperative bank is regulated by the Central Bank of Kenya. And we do have a challenge with documentation, refugees' access to documentation. The documents that are issued to refugees are not compliant with the KYC requirement, which makes it really, really difficult for banks, especially specifically regulated by the Central Bank of Kenya, to offer services to refugees. That is something that is hopefully is beginning to change. So we hope that we can have more banks in this. But in the absence of that, then we looked at microfinance institutions, which seem to, not seem, but do have a bit of flexibility. They have limited experience working with in refugee context. And there we have found an entry point. And for the rest of it, then what Shaz, well, mostly Stephen says applies to Kenya largely.
Thank you, Caroline. Ralph, you had a question.
Yeah, just actually 3 questions, but partially answered already. So the first one is, okay, obviously we're aiming for economic inclusion with these interventions, but are you primarily thinking about the immediate livelihood creation of those people taking the loans, or you're also thinking about multiplier effects, let's say, of those people potentially employing others, therefore creating more livelihoods? That's the easy one. Now, the other one, the 2 other questions go a little bit into the sustainability area that was already covered, because of course the scale of these interventions is rather small compared to the challenges and the numbers of refugees and host populations. So the first question is, okay, are there others doing similar things that work on financial inclusion, and how may that be different from what you do? And the second one, of course, is, and this is where a partial answer was already given, but I'm not thinking about sustainability, but more about scaling up, because obviously the numbers are small. So is there an idea who would do the scaling up? Is it still us? Is it somebody else? Assuming that there will always be also a need for a little bit of additional support to make it viable. Thanks.
Yes, no, thank you so much. Actually, it's just really in line with Ralph's question. Since Prospect is a partnership and there's the World Bank and IFC in the partnership, are you able to influence through that model and through the success factor of that model, your 2 partners? And if not, which is possible, what are your plans to, and if there is a strategy to try to bring them in to have much more impact?
Yeah, thank you very much. Also to bring in some action to Geneva. A silly question. What's happening when a refugee goes back, or a displaced goes back to the area of origin or somewhere else?
Questions. Stephen, go ahead.
Okay, so it's not a silly question. It's something that should actually keep most of us thinking, because whether it is skills, whether it is BDS support, you need to provide it for either the market in which they are living in, or for return, or third country of destination. So I think this goes back to the investment in research. And for example, in Uganda, part of the discussions that were being held between Uganda and Burundi, because return also has to be voluntary. Can we have some cross-pollination between the work that Prospects is doing in Uganda and with UNHCR and the ILO office in Burundi, so that those who are voluntarily returning are actually equipped with the appropriate skills for the labor market in Burundi, or with the appropriate business development capabilities that can allow them thrive once they return. What happens to them? I think we don't know many of them who are returning. That's why the numbers are growing in the host countries instead of reducing. Uganda currently is having an influx, and Evans can speak to this because of the DRC situation. So instead of the numbers reducing, so there is very few cases of return. And even where there is return, they return, but then come back, because the countries that are hosting them in most cases provide a certain environment that enables them thrive. And for Arab states, maybe Shaza can speak to that because the context is different. Now, in terms of scale, I think scale is the easier part of it, because these are for-profit institutions being financial institutions. And once the proof of concept is there, the uptake is easier. The numbers that we mentioned with the pilot are those which are really dedicated to the pilot, but the trickle-down effect of that pilot is already beginning to take shape. The cooperatives that I mentioned, about 18 cooperatives, are not part of the pilot, but they're already being linked to this. The work that we're doing in the EIIP interventions, either linked to the dairy value chain or the road upgrades, are not part of the pilot, but they're already being linked to this. So the most important thing then is having that proof of concept and the bank buying into it, because I think maybe just to reemphasize what I mentioned earlier, that the financial institution was able to adjust and change its lending procedures and its internal policies. So that already provides room for it to scale beyond, because we are not putting the financial aspects of the money that is being lent out. Now, the technical side, I think one of the things that Prospects has done is, move almost in a 2 or 3 stronged approach, where we are providing capacity building to business development service providers. And this work, for example, with Shabele Bank, is not only the financial institution, but their business development service providers attached to the financial institution. That is besides the capacity development that has been provided in-house. So that allows for it to continue with or without the ILO investment. Now, the other thing in terms of the partnership also, for example, in the case of Ethiopia, the refugee and returnee services, which is the government agency responsible for refugees, this is the first time they are seeing such a partnership, because before private sector engages, or before any partner engages in the refugee space, they are supposed to sign letters of understanding. But this is a letter of understanding that took us the longest period, because they are used to working more with non-governmental and not-for-profit institutions. And there was no template for working with private sector. So one of the things that this has also led us to is supporting government to come up with a template on an agreement between government and the private sector on how to engage with displaced persons. So we already see that as a possibility for linkage with UNHCR, because they are also part of this agreement, but also with IFC in the event that there is need to scale. But just to reemphasize that it is mainly demand-driven, and you can only move to the extent possible where there's a demand. I want to provide 2 last contexts. One is on the the approach and its linkage to jobs and scale, or linkages to other employment opportunities. Normally, in displacement situations, I'll give the case of Kabrebea refugee camp, which has about 14,500 displaced persons. Those under 18 who are not, or maybe those under 16 who are not part of the working age population are probably the majority. And then those above 62 who are also out of that bracket are also quite significant. So out of about 14,500, you have maybe only 4,000 who are eligible to be in the working age population and therefore can access such services. Now, the need to consolidate these to productivity and linkages to employment opportunities then becomes high. And that's why we said our focus now is linkages to the market, but also whatever investment can be provided to them to start enterprises that employ others. For each of these pilot tests, the enterprises are being run as, what's the statistical word? On account. They're on account workers, but they are employing others already. So the trickle-down effect of that one shop has about 2 or 3 people that it's providing employment opportunities to. It may not be as big as we anticipate, but that is where a majority of the jobs anyway are. So there's some trickle-down effect and there's some positive returns that come out of that, despite the small numbers in the pilot.
I'll try to just address a few points. And of course, the point you mentioned, Ralph, about employment and livelihoods opportunities was, of course, at the heart of the thinking, because as I mentioned earlier, I mean, at the end of the day, financial inclusion is a means, it's not the end by itself. But at the same time, in the context of Lebanon, where people were losing their jobs, so I mean, what we took into account, and that's a constant discussion we have with Louis Pierre on the measurements, is really the retention of jobs. I mean, how many jobs were we able to retain and how many new jobs were we able to create? And mostly really the direct jobs. I mean, we can also look at the induced and the indirect jobs, across the whole value chain. But I mean, I think our partner from the microfinance institution mentioned like around 1,400 jobs in terms of both created and retained. But again, I just want to say here that what we wanted to do here is a proof of concept, not of microfinance, because microfinance historically was very strong in Lebanon, but more that in this conflict and crisis situation. And recently, we've just completed an early tracer study to look also and compare between our different intervention models. Because at the heart of the crisis in 2020, 2021, we had to actually give grants. That we had no option but to give grants for some business startups. So we were comparing also what were the results from the grant model and the loan model. And I mean, we still need to do more of these tracer studies, but the initial results do show that the loan model yield better results and definitely, also have better and more sustainable results, not just in terms of the enhancement of productivity, but also in terms of the job creation angle. Now, what are we planning to do next and how can we scale it up further? We already have very serious plans and we've already have discussions with international lenders, crowdfunding platforms, now with our colleague Yusra here in the social finance unit, because they're also having their discussions at the global level with Kiva. So this is a crowdfunding platform to see how such platforms or such international lenders can actually revive their or renew their trust in lending in Lebanon, because I mean, many of them lost that trust, and then also lending to the microfinance institutions. And that was, we could not have even engaged in such a discussion with Kiva in Lebanon at this point, had we not had this collaboration with Al Majmoua. So we're quite advanced on that, and despite the escalation in conflict between September and November, our recent discussions after that actually show that there is now renewed interest, and this can be in Lebanon. This can really become extremely scalable if we take into account the prospects for reconstruction and recovery. So if the country really takes on that path that everyone hopes to see it take, in terms of their necessary reforms, then there is huge potential for Lebanon to go, to, take the reconstruction and recovery path. And then there will be a lot of opportunities as well, of course, for access to finance, for reviving the whole microfinance sector, and hopefully in the future also reviving the banking sector as a whole, which again, at some point was very strong in Lebanon. On IFC, Nieves left, but or the World Bank, I don't know why it remains really our biggest challenge in this program. We've talked a lot to IFC. This risk, the risk they are willing to take in investments has been very challenging, and they don't speak to the same clients. They're not willing to take the same risks that we do. But we are seeing some positive engagement with them now in Iraq. Iraq is a different model. There we were engaging with still are engaging with the Central Bank of Iraq. So unfortunately, a situation that was not possible in Lebanon with the collapse of the whole banking system. So the IFC is now interested to look into the financial inclusion model that the ILO has put in place in Iraq, and to identify avenues for collaboration in the second phase of the program. I see my colleague Fadia, who's our technical officer on financial inclusion, and has really been behind this work, to if she wants to add anything before, I don't know.
Yeah. Please go ahead, Fadia, and then I can also complement on something. Please, Fadia.
Thank you, colleagues. Very dear subject, obviously, to our heart, to my heart at least. And thank you very much, Shaza, for highlighting all the experiences we had in this, at least in the Lebanon model. But an observation, when we are working in these countries, because I've worked in Iraq, now in Lebanon, and I'm seeing other countries around us in the region, at least. It's all, what we're seeing is that we are working in emerging markets. These markets are not mature. There's a lot of reluctance to engage and to work with regularly the regular SMEs, the regular nationals, and then comes another layer working with the refugees. That's always an additional layer of complexity. Someone asked a question about the risk mitigation. Yes, wherever and whenever possible, we introduce guarantee mechanisms, and that's what we've done in Iraq, for example. But I want to comment on Lebanon. In the Lebanon model, Majmoua had already worked with refugees before, and their issue was they didn't have any, their capital, which was $100 million, dropped to $2 million, right? So now their issue is that they don't have any more liquidity to support, working with the refugees. That constituted around 15-20% of their portfolio before the crisis. So here it's important. We put in place, by the way, a small guarantee fund to push more for refugee inclusion and some higher loan tickets. And that helped. Majmoua was, though they know that the sector and the segments, they were also reluctant. But at the same time, notice that, when you are looking for partnerships, you need a partner that is willing to engage. And this is a discussion that you need to have before you design your intervention. Which market players are willing to engage? I've seen it. There are players, no matter what, they are not interested. So it's a lost case for you to play with. On the question related to sustainability, and just adding to what the colleagues, Stephen and Shaza said a lot on this. But what I've noticed personally is that the beauty of, investing funds, assume we would have given this amount of money into grants for farmers. The impact is straightforward with these farmers only that benefited from it. If you are giving this or investing this amount of money into a capital of an MFI and asking them as well to put in, the leverage we're getting usually is 1 to 3, 2 to 3 sometimes. So a lot of additional funds are invested, but the beauty of it is that it continues. We always put in conditionality with these institutions, that whatever funds is being invested into their capital, this continues to revolve. So clients will repay. I have 400 clients already benefited. Now, as of now, I know that there's at least 600 or 700 double, after some of them close and other people are benefiting. And we put conditionality that this continues to serve the same segments, the same sectors. So that helps in the sustainability and the continuity of the service. And yes, indeed, I mean, the scalability, Shada pointed out a lot about this. But I mean, what I want to point out, an additional element to it, again, because the market is not properly functioning, we had to introduce some blended finance approaches that are not the usual approach in a regular market where, any financial institution would be willing. This is why we think that in post-conflict situations, blended finance is an excellent approach. And we noted as well the impact of these pilots, like, Stephen said, it's a proof of concept. It's not only that the institution itself is willing to scale it. We've seen in many cases, in Lebanon now at least, we know that the European Union, the World Bank, both of them are following our steps. They are doing the same model that we're doing. They're investing in the capital of the microfinance institution, asking them to put in. So whenever you make a proof of concept that works, others will follow. It's just by default. In Iraq, for example, this proof of concept has allowed ILO to attract additional funding from other donors so that this model works. So it's always good to have the, and this is why I love prospects. I think we all love prospects because it does allow us to innovate and bring in some new ventures that carry a lot of risk, but it also can bring a lot of rewards afterwards. So thank you again, and I hope I haven't been so long.
Thanks, Fedia, and thanks also for answering some of the questions that were on the chat. Any other question from the colleagues here or online? Okay. While we are looking at the other questions online that we might have missed, perhaps also on the scalability, and you had some answers on the demand, and the demand is always there and unfortunately growing. But I think you wanted to understand from the bank's side, what is their appetite to expand and to continue using their funds? I don't know whether I understood rightly your question or not.
Well, actually, whether it's the banks without any additional help or additional organizations, donors who are willing to pick up the model and basically add the grant element that may be needed.
I think the example also of Ethiopia and all of them, I think I'm just taking the example of Ethiopia, where you started by saying that Shabele Bank is not any bank. It's a bank that has 50 branches. We are changing systems within the bank, which means that they pilot in that particular branch with 200, and then they're going to roll out everywhere. The work that also Stephen mentioned with the Association of Microfinance Institution is also something to leverage that work and to promote it. The research, the work, promoting the proof of concept that we are doing with this particular bank in Ethiopia is also something that will show that there is a market. You are taking, I mean, the banks, the financial sector, when there is profit, they will follow. Yeah. And the last point is also the work with the central bank. So if we are able to make that the environment, to influence the environment, because we are embarking the central bank with us in this whole journey, then they would understand also what is this segment, and they are able to facilitate a little bit the access, then it will open up more. And I think you rightly mentioned that you are now receiving additional requests by other banks saying, can you support us? Can you help us? So I think the scaling up is already embedded since the very beginning in an incremental way by which we are building step by step and brick by brick so that we can reach that scale even and live the legacy even after prospects and the ILO is not there anymore. Nick, you wanted to say something?
Just very quickly, maybe also to pick up on this IFC question. I think it's also important that we understand that in the partnership, we have different roles and responsibilities, and we also have different target groups. The IFC works at a different level, and that's actually a very good thing. They reach a level of private sector actor that the ILO simply won't or can't reach in many cases. So they also run blended finance facilities, but they are simply working at higher levels, particularly in the value chain. And that's good for the value chain. It means the value chain is healthier. We need that level of investment to happen at in terms of the higher actors, those who really invest further down the value chain later on, because then that's going to be picked up. The benefits of that, we hope, will be picked up by the actors that we work with. We work with the micro small businesses, and they need that support as well. IFC, less so. So everybody has their role to play in the partnership. And I think that's an important point to make. This isn't about us duplicating. It's about us looking at where those complementarities might be, including in the financial inclusion value chain.
And perhaps to continue on the partnership and the synergies and the complementarities, we have, at least on the financial inclusion space, a very good collaboration with UNHCR, and where we complement each other both at the global level, thinking and strategizing, but also at the country level, where actions are building on each other. And I think the example of Kenya, where we have started the whole work in Kenya on a workshop where we have been invited with other MFIs that has been organized by UNHCR, where we had tripartite MOUs between ILO, UNHCR, and the MFIs, is also an example of how some of the partnerships can work. How are we doing with time? Almost done. So final words. So I don't know whether you have anything to close this, perhaps looking forward, anything that you have not shared that you would like to share. Let me start with Shaza.
Yeah, I mean, yeah, a lot more to share, but of course, just very briefly on the collaboration with UNHCR, indeed, more on the financial inclusion in Iraq, we've been really talking. And one aspect maybe we didn't touch upon a lot today is the regulatory framework. At the end of the day, we cannot assume that every refugee has the ability by law to actually open a bank account. So that's something we have been discussing, and now with UNHCR also trying to advocate while the refugee law is being amended in Iraq. So that's just an example on the policy regulatory framework. One thing we did not mention as well, maybe Stephen briefly alluded to, which is really the combination of financial and non-financial services. And here I also want to very much highlight the importance of the ILOs or the added value of the ILO, where we really, it's not just a loan that we're giving, it's a whole process of providing also financial education and adapting the financial education based on the demand, like what's expected or what is needed in Lebanon as a middle income country is different than what is needed in other countries. So we do not have refugees in camps as well. So it's a very different environment. And the Start and Improve Your Business, that also proved to be very useful. Here, we also adapted it to the context and developed the Improve Your Agribusiness, IYAB. So that's, I mean, let's not forget this importance of the mix between indeed financial and non-financial services. Fadi has already alluded extensively on the blended finance approach and its importance, specifically in the humanitarian development peace nexus, right? Like when we are moving from the humanitarian to the development context. Partnerships is like an objective in prospects. We will continue to aspire and work on trying to improve further. So, and it's a process. It's not something that will happen overnight. But again, I don't think the scalability that we were able to achieve in Iraq in terms of KfW, a bank, willing to actually invest $20 million with the ILO, and now hopefully moving for more funding as well, would have been possible had they not seen this proof of concept with the central bank and the strength of the ILO approach, intervening at the policy regulatory framework, at the meso level with the financial institutions, and then at the micro level with the clients, right, with the host communities and refugees. We really hope that in the coming period in Lebanon, with the reconstruction and recovery, we would be able to engage, which is really what is needed, like as part of the broader reforms in the country, to also engage at that level, not to remain at the meso and the micro level. And one very, very final remark, what the development in Syria now is big, is very, it has major implications for everything that we're doing in the region, especially those of us who work on forced displacement, but even beyond. Because the development in Syria also has an economic impact on Lebanon and on the region. So we already have started thinking here, and there's a lot of thinking we need to do on how innovative can we be in terms of supporting now the returnees. Not only supporting them as individuals, but also supporting them to contribute to their country's reconstruction and development. So thank you very much.
Okay, just 4 things, 2 of them re-emphasizing the points already mentioned by Saja, and it's on the regulatory work, because we have not spoken much about that, but the success of all this cannot be possible without a conducive environment in terms of the regulations and the endorsement of the central banks. The work in Uganda, largely successful because the central bank was very heavily involved and endorsed all the financial inclusion and education materials that we came up with. It takes a bit of time. It took about a year, if you remember. And without this endorsement, it becomes easy to move forward. But then 2, I think it's important to also appreciate the added value of Prospects as a program, because we spoke about this yesterday as well. It is not common that you'll find programs like Prospects in many contexts that address most of the areas of ILO's core decent work agenda. So this is also an added value that then allows us to see some of the results that we see here, because you're not only providing financial inclusion support or financial education, but it's linked to all other cores of ILO, and we're able to move these pieces. But maybe for Ralph, and maybe I look at Louis P also here, we've been discussing a lot on employment impact assessments in the context of EIIP. It could also be an area for us to look at what is the employment impact assessment of ILO's investment on financial education and inclusion. Because many times we talk about employment impact assessments from infrastructure. Based on the question you raise, maybe it's good that we begin to think, all this investment, how does it lead to jobs and what is the evidence available? I think these are the key parting reflections for me, and just to say huge thanks to my colleagues with whom I work in delivering this work, and many of them are online. Thank you.
Thanks for those final words. And let me thank you both for sharing with us the amazing experiences, and also thanking all of the CTAs and of the colleagues that are here or online that have worked on finance or that will be working on finance very soon. And thank you also for the colleagues online for the contribution. And so thanks for Prospects as well for having made this brown bag lunch possible. And bon appetit if there is still time to eat. Thank you, colleagues that are online, and bye, everyone.